The S&P 500 tech sector pacing for its longest monthly win streak now since early 2014. That move being driven in part by today's Microsoft announcement, the stock hitting a record high after the company gave new details on pricing for its AI products. Joining me now with his read on all things tech, CNBC contributor Toney of Plexo Capital. Welcome back. It's nice to see you.
Good to see you as well.
Microsoft, I guess, just reminding us all that they're in the driver's seat, it would seem, as it relates to AI.
That is true. Or maybe the ChatGPT, maybe the product manager said, hey, ChatGPT, the street thinks you should be $10 a month. What are your thoughts? 30.
You know what? And it's not lost on me either that as we see those shares higher, I'm looking squarely at Alphabet, right? That stock's in the red today. And to my earlier point, this alleged arms race between the two, is Alphabet closer to Microsoft, or does Microsoft just still, with announcements like they did today, just keep telling you why they're ahead?
Yeah, I think when we look back, we saw some of the data that showed that the adoption of Bing had slowed somewhat, and I think that offered a little bit of hope. But look, Microsoft really keeps bringing it. We've heard everyone in earnings calls talk about the promise of AI, how AI is getting incorporated into products. But now Microsoft is showing that they're going to be really aggressive on monetizing. So, this is yet another step ahead that Microsoft is taking in the market.
As the stocks go up, and in many cases, these valuations keep growing too. The multiples get richer. It's largely why we're here, multiple expansion. How do you assess whether valuations have gotten a little ahead of themselves, or a lot for that matter?
Yeah, it's really interesting. I think one of the things that we need to look at, especially if we're going to talk specifically about AI and Microsoft right now, is the adoption that will happen as a result of this new pricing. The Microsoft sales team has always been very aggressive in how they price things like 365. And now we need to see, will the market adopt this? I think there are some very compelling use cases. And I think one of the things that might have also gone a little bit unnoticed is how Microsoft is using bringing all these services to the cloud as a carrot to bring people from the on-prem world to the cloud, because those capabilities from the AI Copilot won't be available on-prem. But yes, back to your question, we need to see the monetization happen to justify these ever-increasing prices.
Well, how soon do you think we'll start seeing that, right? At some point, Wall Street says, we'll give you the benefit. We say now, we'll give you the benefit of the doubt. And that's why the stocks go up, valuations are where they are. But at some point, the proof has to be in the pudding. What kind of runway are we talking about before we see tangible results?
I think the next 2 quarters is about as much patience as Wall Street is going to have. Wall Street has shown patience in trying to better understand how these companies are going to incorporate some of these new technologies, specifically AI. And now I think we're going to want to see that. Perhaps we'll give runway to companies that we don't deem as particularly tech focused, although you could argue every company is a tech company now. I think first we'll want to see the big tech or the Magnificent Seven for the next 2 quarters and see how the performance goes. And then I think we'll look to see what some of the other companies are doing to incorporate these changes in the technology landscape to be able to accelerate their businesses.
The other thing I'd like your take on, because you got such a firsthand look at it, is the state of the so-called IPO ice age, and whether you think we're closer to a thaw. Just where are we?
Last time I was on your show, we talked a little bit about this, and I think I'm going to stand firm that we're going to, I believe, see a little bit of an opening in Q1 of next year. I just don't see how it could possibly happen. We're about to enter the summer months in full force with August coming up. So there'll be a little bit of a window in between the holidays. But I really think that we'll look to see how earnings play out. Look, we also are seeing a much more broad-based rally within the stock market. I mean, at first it was really driven by the tech stocks. And the tech stocks were reacting primarily, I think, to the data that we're seeing around inflation. We'll wait and see how the Fed looks at that. But look, now we're seeing a broader based rally to show that this isn't constrained just to the tech stocks. I think that also bodes well for the overall market and the IPO market thawing a little bit, even though most of the IPO pipeline are going to be those tech companies. I think the market kind of seeing that there's support to be able to increase valuations more broadly beyond tech is a good sign as well.
When startups come to you with their hands out, what's your reaction today relative to, say, excuse me, 8 to 10 months ago?
Yeah, it's a much different environment. I think although there are no hard and fast numbers for those early stages of investing, it's more of a feel for how the company's progress has been. There is no question that we have definitely tightened the ability for companies to be able to raise money as quickly as they had in the past, the amounts that they had raised, and the associated valuations. I think this actually bodes well. It'll be a little bit of a psychology reset for founders. But at the end of the day, we'll see fewer companies getting funded. Companies that probably should not have been funded will not get funded in this new environment, meaning lower amounts of competition for the true winners, both in terms of acquiring customers and also getting employees. So I think overall, this is a good situation. And back to that psychology for the founders. A lower valuation takes a lot of pressure off of them in being able to have more optionality and to have a little bit more patience with the business model.
Yeah, good to catch up with you again, Lo. We'll see you soon.